Good afternoon and welcome to the January edition of the ERE webinar with me, Kristian McClory. I'm the Business Development Manager here for ERE Lettings. Today I just wanted to talk a little bit about how last year finished in terms of the rental demand and the statistics, and then what that means for investors and landlords coming into 2022. So just to go straight back to last year, as we all know, the UK rental growth hits a 13-year high demand, and it doubles in major cities. So your Liverpools, your Manchesters, your Leeds, a lot of people wanting to get back to the city centres, given what's been going on over the last couple of years with COVID. So the rental market has started to definitely have a bit more of a boom, which is absolutely fantastic. Landlords are really seeing great increases, still a continued good calibre of tenant as well. Regions registering the highest levels of rental growth are among those that are the most affordable when compared to the UK average. And as such, there's been a bit more room for rent increases. So places that maybe we would see that as that's a fairly lower rent there has now been increased, brought up in line, which is great. Again, yields of investment return have gone higher. Landlords are much happier. So the rental growth, should I say, is close to or at a 10-year high across most UK regions, except in London and Scotland. So the rents are up most in the southwest at 9% year on year. So that's absolutely brilliant, and long may that continue. Followed by Wales at 7.7% and the East Midlands at 6.9%. Now, here at ERE, we do have quite a lot of properties in the East Midlands as well, and we've definitely seen that firsthand of the rents going north. And just having a lot more people wanting to apply for each individual property, so it gives people a lot more option. Many of the UK's largest cities, the annual rent growth is running well ahead of the 5-year average rate. So Bristol, again, down in the south, it was leading with 8.4% growth in the year to September, and followed by Nottingham at 8.3%. So Nottingham as well, some fantastic units there, Pictureworks, Landmark, and we know already the rents are continually doing this. As soon as properties are listed, especially towards the back end, there was a multitude of different people wanting to come and view, and that's what we're going to try and continue getting through with 2022. Now, rental demand in central zones of Manchester, Edinburgh and Leeds have at least doubled over Q3 when compared to Q1 of last year. And in Birmingham, demand has increased by 60%. And this is buoyed by the return of the office workers and the students. So there's a lot more people wanting to come back to city centre living, as I've said before, and just get really back into the swing of things. Now, there was an element towards December with a new variant that sort of had a bit of a knock-on effect. Things took a little bit of a slowdown, but nothing too major. And then there's always the seasonal element as well. Not too many people wanting to move on that week around Christmas and New Year. But ultimately, I think everyone would agree is that especially the latter part of 2021, the figures were unbelievable. The amount of people wanting to move, the increases in price, not just from a lettings point of view. I know that the sales market as well has really had a strong boom. And that's what people are looking to see what's going to continue coming into 2022. Now, just on that, so what should landlords be expecting in 2022? Now, as it approaches, Zoopla's predicted another year of rental growth underpinned by a low supply of properties and a strong employment market. So you've probably seen again in the news, there's a lot of news about new starters being on much higher wages because companies are really pushing the boat out to get everyone they can on board nice and early. So here's a summary of how the market could look next year. As with anything, it's never written in stone, but this is what the predicted forecasts are currently saying. Rents are forecast to rise by another 4.5% by the end of 2022. That's huge. For investors, your yields are changing straight there. Looking at purchasing another one, which we'd love to help with, but just in terms of seeing what that could be, excellent. Growth in London is expected to reach 3.5% and ultimately exceed pre-pandemic levels. So over the last few years, as we all know, with the pandemic, it's been sort of changing up and down, what's been happening, who's been moving, who's staying where they are in situ. So that's going to be really great to see that boost past the pre-pandemic levels. The demand levels could remain higher than usual, especially in city centres. Again, this all comes down to where the jobs are. People are wanting to be back in that sort of social element of being able to go local to the bars and the restaurants that are all right on your doorstep. And there's some, I mean, the new developments that are coming up as well are all fantastically done, really well built. And it just means the tenants have got a really good lease of life. Once you're in, make it your own, blank canvas. That's going to be a great start for the landlords. As I've said, the city centres, Manchester, Liverpool, Leeds, places like that, a really solid boom around them. Rental stock could remain tight due to lower levels of investment by landlords. So the prices from the sales side, it's not just the letting side, but the prices on the sales side have also continually grown across majority of the cities. So that means that the investors might be purchasing something at a higher percent or a higher price. And in turn, when they get the higher rent, it's actually not made much of a difference. So they've done a bit of a holding off, but there is some really great deals out there. Recently, I've done some property sourcing for a couple of our landlords, managed to get some great deals at really strong prices. And that means that now we've been able to get them a tenant in, and the rent that they are getting, the yields and the return on investment over the next sort of 5 to 10 years, been well worth doing, put it that way. And if that's something that we can help you with, we'd love to do that. So please do get in touch. Rents could rise above earnings in the areas of the country where rents are relatively more affordable. So as we all know, with the rents going up, property prices in general doing the same, going north, but other things aren't sort of moving as gradual or at all on that front in terms of earnings or other outgoing costs that people might have. So the rent market, you will see a continual growth. I think it's really important that your agent or whoever you speak with about that keeps you in line with what's going on. It's very easy to have a look online and see what properties are doing, how long they've been available, but ultimately your agent should have an even better or a more sort of background check for you with all the knowledge that you need to be able to make an informed decision about what prices works. What price am I going to go on the market at, Chris? Am I going to get it within this time frame with a great tenant? Because it all comes together. And just again, Rightmove has predicted that the average asking price for homes, so currently that's at 342,401, that's due to increase by 5% this year, which would be a whopping £17,000 more. It's a staggering amount of money. But I think you'll agree, if it's continue doing this, and that's good, we can build even better sort of portfolio management for landlords and make sure everything that they've got in terms of knowing when the market's good, is now a good time to sell, is now a good time to buy. That's what we want to be here for as a collective, and get those statistics across to you well in advance. So that's how 2021 was looking last year, and that's again now what 2022 is forecasted going forward. So we're really looking forward to seeing where that goes and how that continues. As I say, we'll be keeping people up to date. We'll be doing these webinars monthly, and I'll also be sending out plenty of videos for any changes, maybe in more specific areas as well, as opposed to the country on a whole. We'll get down to Liverpool or Leeds, Manchester. I'll be able to show you a bit more in depth of what we're seeing out on the ground, because I think that's always really helpful for people to see case studies as and when they're happening. But as I say, definitely be keeping everyone up to date on that. It's nice for people to know what their investment could be returning, or if they wanted to get into investments with property specifically, then finding out exactly where would be a good place to start with that. And as all of that's pointed towards, your major cities are definitely the place you want to be. The last time we did a webinar, we actually did have some questions from some of you that joined. And again, thanks for joining and watching today. One of the first questions was, where are the rents growing the fastest? Now, I've written on here a few different things, but rental growth across the UK, it did reach 4.6% during Q3 after the post-summer rise of 3%. Now, excluding London, average UK rental growth reached 6% last quarter, and that's the highest recorded for a very long time. So just in general, before we come to where is really boosting the most, just in general, and I know we've reiterated this a couple of times, but it unbelievable, unseen, unfathomable, not seen before, and that's what we're trying to make sure it's going to continue. Now, regionally, the top three performing regions were the Southwest, as we've said, Wales and the East Midlands, with respective year-on-year growth of 9%. 7.7% for Wales and 6.9% in the East Midlands. So in the year to September, Bristol was the UK's top performing city for growth, followed by Nottingham and then Glasgow at the end there. So all of these major cities, again, having a lot more people coming to them. It might be people changing jobs. It might be people just wanting a new lease of life after what's been going on with the pandemic. They fancy a new start. Why not choose a great city such as one of those? Why is there an imbalance of supply and demand? So I think that's one of the biggest questions that we probably get asked most weeks now about, well, why is this rental surge happening? What is going on and how long can it continue for? So the reports that we've got, it's just showing impressive rental growth is due to the imbalance of supply and demand. As we all know, there's just simply not enough property. In fact, the supply of rental properties was recorded at 43% below its 5-year average during Q3. So already that's a huge amount of property not on the market available for people to take on. Now, this is down to a rise in post-lockdown demands from tenants, as well as landlords exiting the market or deciding not to invest further. There's been plenty of people that have thought, now might be the time to offload my portfolio and do something else with it, invest elsewhere. But actually, I think as you'll see here, and hopefully you'll agree once the webinar's finished, is that property is going to be doing even better as we go forward. So it probably even makes more sense to get another property and add it in, make sure it's in a great area, it's something that can be looked after really easily and quite well, and just maximise that yield, maximise that return. So to talk about that, how do I actually maximise yield from your investment? The first thing I'd say is definitely just make sure your property is rent ready. Photograph wise, the average on Rightmove at the moment is about 3.2 seconds for people to look at photos. It's not long at all, so it needs to stand out and it needs to really grab people's attention. As I say, marketing that property really well, whether that's virtual tours, floor plans, giving people as much information as possible so that they can make a decision about booking a viewing, a physical viewing with us and getting them down there. We want to show them it in its best light. We want them to understand landlord's giving it in this condition, make it your own within the remit, but make it a family home, be there long term, pay the rent on time, and that's it. And that comes back to the third point of carefully screening your tenant. Referencing is a big thing. I spoke to landlords previously in the past who've said, no, Chris, I've moved tenants in, never done referencing and it's been fine. But it'll be that one time that the referencing's missed off, that becomes an issue. The referencing is a very stringent process, but it's there for a reason. Checks the tenancy details of their last one to make sure the rent was paid on time, there was no issues with the deposit, what their current employer is saying in terms of length of contract and how much they're earning. All those things are really, really important. Get a good tenant in, and then you're not losing money on your property by legal fees or having to recoup lost rent. Regular inspections, another massively important one for landlords. Conduct them just nice and easy every quarter. Get in the property, arrange it with the tenant, go around, take photos. It's almost like another inventory, and it gives you the opportunity to see how it's doing in there, and we can stay on top of any issues, anything that could be getting worse over time. We want to jump straight on that, clear it, and get it done, and then it saves people the money on having to spend large for things such as water damage or anything like that. And avoiding the tenant turnover. Now, bit of a difficult one because tenants never really know, people in general, should I say, never really know how long they're going to need somewhere. It could be 6 months, it could be 3 years. But I think what we're saying here about the demand levels and the amount of people that are coming forward for each individual property is we can ask that question. How long are you looking to stay for? Would you be willing to sign a longer contract? Absolutely, yes, I would. Then that works better. You're saving on your fees of the tenant changing. You're saving on having to find people with void periods. And once you've got a great tenant in, you know that money's going to be there every single month, and it just keeps ticking over nice and smoothly. So that's a bit of an update on how you can maximise the investment yield there. So hopefully this webinar has been quite useful for people. And again, there is a lot more information that we can sort of hand out. We'll be doing that over the next few weeks in legislation videos, market update videos and other webinars. So please do join in with those. And as I say, if there's anything property needs wise that we can help with here at ERE, I'd love for you to get in touch. There'll be a link to my Calendly at the end of this. So please use that. You can book in for a 15, a 30 or a 60-minute call. We can chat through what you're looking to do. Maybe you're just starting out, or maybe you're looking to add another investment. I'd love to be able to property source, help find you the next investment, and go through any queries, concerns, anything like that that you might have. And I look forward to seeing you all on the next one. Thank you.